Thanks for tuning into Stocks with Antonio. Sorry for those of you that been watching my videos since I haven't made a video in a few days. I do apologize. I had the flu and it's drained me. It took a lot of energy out of me. So that's why you hadn't seen me make any videos in a couple days, but I'm back, right? I get it. It's the stock market. The stock market doesn't believe in flu or allergies or anything like that. But if you do have the flu, I feel for you. I hope you feel better. Even though I'm not a big YouTuber or anything, I'm just a small channel. Show me some love down below in the comments. Smash the like button. Also, don't be shy if you have the flu. Let me know, right? Let me know that we're both in the same boat, but I am feeling a little bit better. Got a little bit of energy today. And what a day in the market, right? A lot of you, well, not a lot of you, all of us that have a brokerage, that have a portfolio, we're seeing red when we log into it. And let's face it, we don't want to see red. We want to see green, right? We want to see our money growing. So when moments like this, with a war going on, oil keeps going up, the stock prices are going down, gas through the roof. It's not the best time to invest. And a lot of people right now, they're not really thinking about investing, especially when your personal expenses are probably increasing, right? Especially with these gas prices. But even though right now it's not sexy, it's not fun to invest, this is the time where the individuals that make the effort to invest in the market are going to build wealth as long as they're investing in good companies and good assets, right? This is the time. Now, some of you that are watching this may understand this. Maybe you go to the gym. If you go to the gym, if someone made a decision to go to the gym, what are you going to have to do? You're going to have to train 45 minutes to an hour on a regular basis. Got to change your eating habits, and it's not going to happen overnight, right? You got to be you got to be consistent with your workouts, and you got to give it time to see results. And if you do that, you can change the way you look when it comes to fitness, right? You can see yourself in better shape, feel better about yourself, etc. Well, when it comes to investing, same thing. It's not going to be easy. You got to be disciplined. You got to be consistent, and you got to find ways to make it happen. I get it right now. If you have, your bills going up because everything's increasing in price, it is going to be a little bit harder for you to invest. So what do? You got to maybe take a side hustle. Maybe you got to DoorDash. Maybe you got to do Uber Eats. And these are just some suggestions. And maybe that can help you make an extra 20, 25 bucks a week that you can put into the stock market. But if you want to build wealth, you got to find ways to make extra money so you can have money to invest, right? Because how are you going to build wealth if you don't put any money in the market, if you don't dedicate any time to it, if you don't give it any discipline, right? So I wanted to throw that out there. But right now, there is opportunity in these pullbacks with the Mag 7. Look at Amazon. Amazon not that long ago was at $250 a share. Now it's under $210. Great buying opportunity because eventually Amazon will be a $300 stock. So Amazon is something I'm going to continue to dollar cost average. I've had since 2022. When I first got into Amazon in 2022, it was at $144 a share. And I wish I would have bought more. So I got in at $144 a share and I continue to dollar cost average, and Amazon has not disappointed me. Another one that in 2025 was over $700 a share. And even 2026 after earnings, it went over $700 a share. Meta's under $600 a share. I get it. A lot of people, investors are concerned with Meta spending, and I know Meta has things going on. Go ahead and Google Meta and look at every pullback it has it not recovered and gone higher? And you're going to find out it has. You're going to also find out if for those of you that are newer to investing, look at any time we've had a war and we had a pullback due to war. Have we not recovered? Yes, we have recovered and gone to new highs. Now, it doesn't guarantee that what you're investing will recover and go to new highs, because some investments that people are investing in the market are not good. That's why it's important that you're investing in good companies. And less riskier companies are going to be like the Mag 7, Meta, Amazon, Google, and so on. Now, when it comes to the small caps, they're going to be greater risk. Now, a small cap that I'm still continuing to invest in, that I believe, because it's had good earnings, is showing that it's growing, revenue's increasing, is Serve Robotics. I bought some shares today. Anything under $9, I think is an amazing entry point. If it happens to go lower, I'm going to buy more, but it's a small cap. So this one is riskier. Now, if you're newer to investing, or even if you've been investing for a while, but you're someone that's like, hey, I don't like that much risk, I want something a little bit safer, then forget about common stock, especially small caps. And then you might want to focus more on ETFs. Now, ETFs, they're well diversified for you. You just got to make sure you're investing money into it. And it's kind of, you put money into it and you forget about it. Now, remember, I'm not a financial advisor. I'm just sharing my opinion with what's going on in the market where I think there's opportunity. I'm letting you know what I'm doing with my portfolio. Anything I share in this video is not a suggestion for you buy, hold, or sell, but it's me just saying what I think is going on in the market, where I'm seeing opportunity and what I'm doing. Another one I wanted to bring to your attention is SPYM. That's an ETF. It tracks the S&P 500. Well diversified for you. This one, it closed at $75.96. After hours, it did spike. It's a little over $76. But I think this is a great ETF. If you're just looking for something to put your money into it, put money in it, on a monthly basis and kind of forget about it, I think this is a great ETF. I have this one in my portfolio. I have over 100 shares of this one, and it's done very well for me. So I'm a big believer in this ETFs, and ETFs are pretty good. I like ETFs, especially for those of you that want to take on less risk, don't have time to really watch the portfolio as much. ETFs are great. Right now, these pullbacks, when it's the hardest time to invest because you're seeing the red, with your expenses probably going up and things like that, it's the best time to buy. When the markets are pulling back, when investing is not sexy, it's the best time to buy. That's when you're going to build the most wealth. You just got to put money in good companies and be patient. Now, you're probably watching this saying, well, what are the good companies? Well, I shared my opinion on some of the good companies. The Mag 7. And the Mag 7, some that really stand out to me is Meta, Amazon, Google. So if you're not sure what to invest in, look into the Mag 7, see which one's your favorite ones. But the Mag 7 is definitely where I'm putting my money into. ETF, I shared one of my favorite ones with you. Now, the small caps are going to be riskier, but I am putting money into Serve, SERV. Go ahead, do some research on that one, see what you think. But let me know down in the comments below. Are you investing in this downturn, or are you staying out? Are you panicking? Let me know how you're feeling right now down in the comments below. Thank you so much for watching. If you haven't done so, smash the like button. Show the channel some love. Don't be shy. Go ahead and subscribe to the channel. Help me get to 1,500 subs. Also, check out the description. I got some useful links in there for those of you that might want to learn a little bit more about the charts. I got some flashcards in there that could really help you out when it comes to the candles. So definitely go check that out. Thank you for watching, and I'll see you on the next one.